Hey, this is Caleb from Financial Hub Forex Academy. This video is to let you know that we are having our first Forex Masterclass from the 11th to the 13th of March. This class will be held in Nairobi town at our head offices in JKUAT Towers, former ICA building. We are only limited to about 10 students, and so far, only 5 seats are left. You will be excited to know how to make an extra income away from your day-to-day activities. So be sure to comment below for more information or give us a call to book your seat. And we will see you there.
So hi guys, welcome back to another episode of the Forex Market Breakdown. This is episode 37 of the Forex Market Breakdowns. To start off, we look at some of the trades that we gave you last week. So last week I did share personally around 3 trades: GBP, JPY, oil and gold. All 3 trades were winners, and hopefully you made pips alongside us. So apart from that, we'll jump straight into the fundamentals that have been affecting the markets. Obviously the biggest risk still remains to be coronavirus, now spreading to other countries. We did part 1 showing you what happened in the coronavirus and historically what is likely to happen. We're likely to do another video expounding on what is currently happening and the effect it will have on the global market. So subscribe and turn on your notification bar to wait for that video, which will also have a big impact on how you'll be trading markets. Another risk that's now being priced in the markets is we are likely to get most central banks cutting rates, and this is because coronavirus is hugely affecting the markets, and that is also likely to affect asset prices in the direction of some of the asset prices. So that's briefly what's happening in the fundamental space. And before I jump into the technicals, I'll talk about this book. So this is a very good book. It's called Reminiscence of a Stock Operator. If you're trading and you have not read this book, please stop trading and first read this book. This is a Bible for the traders. So it's a book by one of the greatest traders who ever lived, called Jesse Livermore. It's a recap of his life, the mistakes he made in the market, and it's a very good book. It actually outlines everything you need to learn about how to trade, about how not to take tips from people, about how to develop your own system, about the only way you can test your system is by using money. So there are a lot of lessons contained in this 300-page book, which if you read, I'm sure you won't regret, and probably you'll read it at least 3 or 4 times for you to understand all the lessons that are contained in this book. So that's basically it, and now we'll jump into technicals, showing you what is likely to happen in the markets this week and how you can position yourselves to benefit from these moves. So to start off my technical analysis, I'll look at gold from a weekly chart, and I'll break it down all the way to what I think will be happening this week. So from the weekly chart, last week but one, we had highlighted that we're expecting a move at least to touch 1650. The move came along well, and you can see clearly after the touch of 1650 we had a slight correction, dropping down almost around 800 pips. Markets are volatile now, and an 800 pip move on gold is quite small according to the volatility in the markets. We are at the highest levels in volatility, and if you look at VIX, we are trading at the 40 level while we normally trade at the 15 to 18 level. So that's double of what normally happens. Anyway, clearly from the Fibonacci pattern you can see 27.2 was met, and after that you get a slight correction. So what do I think will happen? Based on this weekly chart, probably we'll see gold sink lower again to touch R1 level and to touch this trend line properly. So you can see we have sunk to the 50 retracement mark on the Fibonacci levels, and we are again aligning for a move to touch 1750. The question is, how do I get this move to 1750? Because we are almost certain the move will be coming along. What we don't know is when, and if we are getting this move, will we first go down for us to go higher, or will we just go straight higher? So we are currently in the buying zones. So if you can be able to place a huge stop loss, you can place your stop below 1550. That's about 400-500 pips, but you're looking for around 1,500 pips. So risk reward ratio still makes sense to me, because you're looking for a big move all the way from 1600 to 1750, and with the high volatility in the markets right now, that's a move that will take less than a week to play out. So on the daily chart, if you look at the daily chart, you get a different perspective. So on the daily chart, we had this correction that touched 1450. From then we got a bullish move to touch 1600. We then got a slight correction, and then we got this extension. So from this move you can construct this trend line, or rather you can draw this trend line, and from this trend line you get that this was a correction to 78.6. So if I draw my trend line, yeah, this was a correction to 78.6, and we got a huge extension all the way to the 161.8 fib extension. That's a huge move in gold. You can again decide to plot your Elliott waves, and you can start at wave 1. This is 0, 1. Okay, plot it badly. So this could be 0, 1, 2, 3 comes in here, 4 and 5, but I'm not sure of the rules about Elliott, so I wouldn't rely on this pattern, but that's something that you can also plot and you get a precise idea of what is happening. Anyway, if I use my Fibonacci, which is what I'm good at, if I plot my fibs from point A to point B, you get that this was a move to touch again 78.6 Fibonacci level, and it looks like markets have formed an inverted hammer, and this is a sign that perhaps bulls are taking over from this point. So for me, how will I be trading this market? If you get a close above P, which is around 1605, 1610, then I'll be buying gold all the way to 1750, and I will sit bullish. But as long as you are trading below 1610, 1614, I won't be doing anything. That's based on the daily chart. If I go down lower to the 4-hour chart, you get the same idea. So on the 4-hour chart, I'd want a close above P and a break of this trend line. So at least the best buying level for me, in fact, is 1625. At that point, I think I'd be risking less, and I'd get a precise move higher, because we'd still come higher, bounce off this 1625, and get a move lower all the way to touch 1530, and this will mean a move to touch 1550 on the weekly chart. So that's what I have on gold. So probably I can outline what I mean. So if we get a move higher and break past P and this trend line, then I'll be buying. But if we get a move higher, we touch the trend line 1625 and we get a good bearish signal, then you can expect a correction all the way to S2, which is around 1530. So those are the two probable scenarios I have. We know there is G7 meeting this week, we know there is Super Tuesday, we know there is coronavirus. So there are a lot of risks that are pegged into the market, which makes gold a good bet for buying. But before that, you need to know what central banks will be doing, and then you can decide what you will do with gold. But that's my outlook on gold. More bullish than bearish generally. Let's say 70% bullish, 30% bearish. But for me to execute the bullish moves, I'd at least wait for a close above P and a close above 1625 for that long move. So that's my outlook on gold. So this is the next pair that I'll be doing, oil. So oil is a commodity. Last week when I was doing the breakdown on oil, I highlighted we will get a probable move to touch the $47.5 mark and probably the $45 mark. So that happened, and you could have made 800 pips if you sat with that position, if you never tinkered. It was a straight collapse, losing almost 14% in a single week. So what do I think will be happening this week? So currently you can see we are having a pullback. I don't think this is a reversal yet. This is just the beginning of the downfall. Oil is probably going to trade as low as $35 by the end of this year. So looking at it from a weekly charts perspective, you can expect a move back up to touch the $50 mark first, and probably the $52.5 mark before the continuation to the downside. That will be a pullback. And if you go down to the daily chart here, you can see clearly we have rejected the S1 mark, and we are now moving higher to touch at least R1 mark, which is $52 mark, and then we'll get a continuation to the downside. So if I use my Fibonacci, that means I'm looking for at least the $78.6 mark. If I use my Fibonacci and I plot it well, yeah, so I'm looking for $78.6 mark, and then I look for the extension here, 41, and the $40 mark ultimately. So yeah, there's a long position that can be executed here, and if you go down to the 4-hour chart, I have finally executed this position. I'm looking forward for a move at least first to touch R1. So if I plot this, I can look for a move first to touch R1 and then R2 ultimately. So that's what I'm looking for in oil, and I think this will play out. I don't think there is a high chance of this not playing out. There's a pretty high chance of this move coming along. First target R1, second target R2. So first target $50 mark, second target $52.5 mark. Those are the levels I'm looking for on oil, and that's the move I'm looking for before we get a continuation to the downside ultimately. So that's my outlook on oil. So the last pair that I look at is Euro Yen. I think there's a good trade that can be executed from Euro Yen. Start off from the weekly chart as usual. So you can see clearly I have a channel, and inside the channel I have 1, 2, 3, 4, 5 Elliott wave well marked. So I think wave 5 is currently in formation, and I think markets are likely, Euro Yen is likely to sink lower, at least to the $112, $111 mark. So that's what I have on the daily chart, and if I plot my fibs to try and look for the 27.2 extension on this one, you get that it aligns with the 111.3 mark, which is also a major level, only that I have not plotted it. So yeah, you can see clearly 111.1, 111.3, 111.5 mark. So that's what I'm looking for long term. Probably in the next 2 or 3 months, I'm looking forward for Euro Yen to keep on sliding lower. If I come back lower to the daily chart, the daily chart, we had the first drop, a big drop all the way from the $122 mark, and we went lower to touch the 118.5. Then we had a correction to touch 121.3, and it looks like markets are now moving lower. So if I draw my fibs again, yep, you get we bounced off 61.8, and it looks like we'll be sinking lower at least to touch 117.3, $117.5 mark, which is the next downside target for me. So I'm currently in this trade, I'm riding this trade, and if I show you how I executed it, this is the 4-hour chart. So on the 4-hour chart you can get, we had this first bounce, second bounce, now we had the third bounce, which aligns again with the 78.6 Fibonacci level, and this R1 mark and the key level. So yeah, 78.6, and you can expect a continuation to touch on 17.8 first, which is my first target, around 250 pips, which I am looking forward to bank on this trade. So that's all I have on the trades that I was sharing. So I've shared Euro Yen, gold and oil. Those are the pairs I'm currently focusing on. Those are the trades I'm looking for this week, and you can know how to position yourself based on that. So that's it. Hope you enjoy, and Caleb will take over from there.
4. When I am wrong, only one thing convinces me of it, and that is to lose money. And I am only right when I make money. That is speculating. Those are the wise words from Jesse Livermore from the book Reminiscences of a Stock Operator. We really advise that you go ahead and look for that book and make sure you read all of it before you start trading your live account. And basically today we won't say much, just as Ken has said, we'll get straight into the markets. Just a recap of last week, which I'll do also on the markets. We looked at GA, and we're looking for GA shorts, and Aussie dollar, we're looking for those downward push to the downside before we go and get that move to the upside. We saw that as we went down to our 10-year lows around below 0.6550 level, and now the market is sort of rebounding and getting that push back to the upside as the sellers have exhausted the market. On the other side, on GA, we saw the market push way higher. We've got to that point at our 61.8 level, in line with our downward trend line, which is really suggesting a downward trend is yet to come. Today I won't cover that. I'll do an in-depth look at USDCAD as I did it last week, and we'll sort of do a breakdown from top down to the lower level. That means from monthly chart down to the hourly level, and see where this market is going to head in the next few days. So that's what I'll do today, and we'll wrap up there and see what's next. So looking at our last analysis on USDCAD that we did 2 weeks ago, a sort of consolidation or a further move down, maybe to touch our 38.2 Fibonacci level. And if we go down to the 4-hour chart, that was the daily chart, we sort of get that formation. So something we learn which we teach under Elliott wave is called alternation. So on our second wave we had alternation, and the fourth wave currently I'm expecting a faster and deeper dip, unlike the second wave, which we had a sort of consolidation movement to the side. So I'm currently targeting, if you can see, I sort of have this temporal blue lines, which are basically my support and resistance lines for the short term, and they're just previous resistance and support levels, which I'm targeting in line with the sea level where the trend line currently is, if you can see that. So I'm still expecting a further move down. So yes guys, now we're down to USDCAD. This is the monthly chart, and as you can see, I've done a technical breakdown from a few years back, since early 2000, late 1990s, early 2000, and you can see we've been respecting Elliott wave analysis. We had that up here, we had that triangle, beautiful triangle, before we had that market drop, which dropped straight from 2002 until and bottomed at 2008, before, or rather 2007, late 2007, before the financial crisis. We know during the financial crisis, the dollar, some part of it gained, and the other part, the dollar lost its value. So looking at it recently, what is happening, if we go down to what is currently happening, and why I'm doing a monthly chart is because we know we just finished the we just closed the month of February, so we have the candlestick on the monthly chart which has just closed, and it's important to look at it because we've been having this downward trend line, as you can see, and the current previous candlestick for the month of February just broke above our trend line, which is an important candlestick close to observe. And as you can see, I've drawn a triangle here, so on the monthly chart we can expect maybe a retrace before we head further up. We just retest the broken trend line and the market pushes further up. But one thing you need to keep in mind is that we always have to adjust these levels. So looking at the market, if we adjust the trend line and bring it down to this previous lower high, and we bring it like that, you can see the market has been respecting that movement. So the market came, so first bounce, second bounce over here, third bounce over here, and now we are getting that fourth bounce. So if this is respected, it will discount what we have at the moment, and the market might get that bounce from that triangle over there, and we might see the market drop further down, having finished that momentum. So we can basically have sort of such a movement, A, B, C, D, maybe a further drop to E, who knows. So we are basically watching the markets to see what happens. So we can get that drop further down if that trend line is respected. So that's simply, but for now I'm really respecting this one. As you can see, the US dollar has been gaining across the board, so apart from Euro USD, but on the other currencies we can see the market has been going further up. So if you go down to the weekly chart, we can see that the market has been respecting that formation, and you can remember from our previous analysis, which I'm sure I've showed at the beginning of the video. So looking at this analysis, what we can see on the weekly chart is that following our last analysis that we had a beautiful triangle formation, A, B, C, D, E, which was in line with our Fibonacci 61.8, if I'm able to zoom that so that you can have a better look. So we can have that, we can see that formation, which was a beautiful formation, and the market shot up afterwards. We came and respected our 1.3300 level, our resistance level, in line with our downward trend line, but we can see the market bounced back up and broke above those two levels, the trend line and the resistance level, and the market currently is trading above, with the monthly close above those levels, with the weekly close above those levels, with daily closes above that level. And looking at previously, we weren't able to break above this level 1.33 since 2019, mid 2019. So we've been bouncing, third bounce, first bounce, second bounce, third bounce. The third bounce didn't come with much momentum, and we saw a push last week up above this level. So currently we're still waiting for that retest of maybe not 1.33 level before we get that move to the upside. If we go down to the daily chart, we can get to see further. As I keep saying, I use a lot of Elliott wave analysis, which helps me get the bigger picture. So breaking down the markets, So breaking it further down, you can see when the market reached at this level over here, we had that beautiful A, B, C, D, E, which was a downward expanding triangle, which is a really good formation to rely on. And after we got that E at the bottom, which was in confluence with the E level, you can see this trend line here, this one here was in line, and we had that other trend line, this one here, which was in line. So that was a beautiful buy level after the market was consolidating. As we know, us USDCAD is fond of consolidating before we get that push to either side, either up or down. So you can get that 1, 2, 3, 4, 5 level, and as you saw in our previous analysis, I'd said that we might get that push to touch Fibonacci level 0.382 or 38.2% level before the market pushed further up. And as I was saying, on Elliott wave analysis, we used alternation, and we can see that's what happened on the third to fourth wave. We got that alternation, which was a fast and quick correction before the market shot further up. If you look at the 4-hour chart, which explains it much better, we can see all those confluences building up together. It was a third trend line bounce after the WXY formation on the fourth wave, and the market pushed further up. So we're getting that sort of break from the bulls, as the market has been trending upwards for the past few weeks, and it has been in correlation with US oil. So looking at US oil, they're inversely correlated, as the market has been dropping further down. On the other side, it has been going up. So it has had sort of that correlation. For the past few days, it hasn't had that much correlation with the dollar index. As you can see, this is the dollar index, which has been dropping for the past few days, which is the dollar index, which is a basket of other currencies weighed against the US dollar. We can see over here the market has really been dropping. As you know, the US dollar has been a safe haven, but for the past few weeks we've lost a lot on that dollar index, unlike what is happening on the USDCAD, which has been going up, except for yesterday's open, which saw the market take a breather from the bulls, and the market has been going further down. So we'll sort of get that ABCD formation. As I remember, I said I'm waiting for that retest of this line, or rather 1.33 level, before we can get to know which side the market will be heading. So that was just a basically in-depth look at this pair. Maybe if you just go back to the 4-hour chart, we can sort of get to see that ABC formation. So what I'm expecting is sort of ABC formation. So market comes further down, maybe you can bounce off this level before we get a further drop to the downside, which can be in line with our trend line. Another second bounce, which the market is fond of doing such corrections, 2 bounces off, or rather 2 retests of the trend line. So basically that's what I'm watching for now. I don't have any trade running at the moment on these pairs. We've sort of exhausted the bulls, so for now we'll take that rest. But as I said on what Jesse Livermore said, it's never, the prices are never too high to begin buying, or neither are they too low to begin selling. So for now, I'm just sitting back and watching. It's always important to sit back and watch and see what is happening in the market. Yeah, so that's basically what I have for you guys this week. We'll do a recap next week, and we'll cover other pairs later on this week. So we have a very beautiful package coming on our website very soon at here at Financial Hub, which will be of important and very, very key to many traders out there. It will really help you. It will be a key strategy to help you analyze the markets, which will release later on. More information on that to come out soon. So basically that's what I have, guys. Have a good week, enjoy, have good pips. Ken has given you a couple of trades. Something else that I forgot to cover that is really important you should watch is that later on this week we have interest rates. Earlier on we saw Aussie dollar today lower the interest rates. Market didn't really factor in that today in the markets. I think it was already factored in, as we knew the base points. The forecast on many people were that we'll still maintain the 0.75 level percent on interest rates, but it was lowered by 25 basis points so that they can help kick back the economy. As you know, Australia's really suffered a lot from the coronavirus with their relations with China and in terms of trade. So later on this week, we also have the trade balance, which is important to watch so that we can know where the market, or rather the economy, has been trading. Apart from that, the Canadian Bank of Canada will be releasing their interest rates as well as their balance of trade, which is important to watch this week. So that's all I have for you guys this week. Enjoy the week and have a wonderful weekend at the end of the week. And just to end, I'd like to leave with a quote, and just so that always remember, anytime you're trading the markets, this is a rule from Jesse Livermore: prices are never too high to begin buying or never too low to begin selling.